Hello, traders. Gary Wagner with the Silver Forecast here. It is the 17th day of March, Thursday. It's approximately a quarter to 11 in Honolulu, Hawaii, and this is the daily report. Silver is trading nominally higher, up about 6 cents this morning, currently trading around 34.29 in terms of the bid price. I always look at the bid price. We are looking at a 120-minute Henkin chart. Each candle represents an average chart of 120 minutes, 2 hours in terms of duration. As you can see, the market has shown a nice tack to the upside as we look at this, and you can see that we have genuinely found our bottom here, and the market is moving up. We did, of course, move our stop yesterday to 33.40. My recommendation is to maintain our long position and to maintain our stop. What I find interesting on this daily chart is I almost, to see the body, the area within this candlestick. This, of course, is a daily candlestick chart. We talked about this yesterday, in which we put in a Fibonacci retracement from the beginning of this rally to the top of this rally. And what we noticed was that we had really good support here at the 23% level, but there was a fear as we had a free fall in the marketplaces in the afternoon session. And of course, this was based upon the tragedy and the ongoing crisis over in Japan, and I'm referring specifically to the nuclear crisis now, not the earthquakes, in which the markets began to melt down. And I had a genuine concern that we were looking at a scenario in which we have never, ever had to deal with. This isn't like Chernobyl. It's certainly not like 3 Mile Island. And the fact of the matter is that I do expect an increase in volatility at this point. But my personal sentiment was that the precious metals markets, in light of all of this, should be moving up, and I saw it moving down. Therefore, I did go ahead and raise those stops yesterday. We will maintain those stops right where they're at 33.40, which is right, as you can see here. So it puts it right below this low here that we hit 2 days ago and yesterday also. We are looking, of course, at a daily bar chart in which we have our Andrews pitchfork. We have been looking at this, I would say, since the beginning and premier edition of the Silver Forecast. Of course, one thing that you want to notice is that when we look at what's called the handle, this is our handle line, that 50% line. We talked about the fact when we first started the forecast that we really couldn't breach this particular top. This is that zero line, or the upper level resistance on the Andrews pitchfork, and it's quite clear that that in fact did become our top in the market. There's no one who's going to doubt that now. But what I am going to say is that I believe where we're going to find support right now is going to be that handle. And I think that as the market begins to trail up, we can kind of follow the handle up. We can get an idea in terms of time parameter, and we can get an idea in terms of tact. In other words, the angle at which this market moves up, whether it's a continuation of a linear move or if it settles down to more of a 45, 90 degree tact. My personal feeling is that at this point we will follow this Andrews pitchfork in terms of the market itself right in here, and we should follow that market up. Of course, we've got incredible volatility with all that's going on in the world, but fundamentally, the market is ripe for a continuation in terms of the moves, these massive moves that we've seen with the precious metals. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.